Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. All right, welcome back to the program. My guest is joining me right now for us to unpack the decisions of the MPC. Of course, I'll be having two segments today, but the first segment is now. The Acting Director, Monetary Policy Department at the Central Bank of Nigeria joins me now. She's Dr. Ladi Balakefi MNI. Welcome, ma'am, and thank you for joining us, Doctor.
Thank you for having me.
Now, let's get started, and I think I need to really get into it quickly. The first question will be, why are prices still sticky in Nigeria, despite the 8% rate hike that we've seen now since this MPC started meeting, I think in September of last year?
No,
so we've seen...
February.
Is it February this year?
February this year.
Oh,
yes.
Okay. Whatever it is.
Yes.
What was I thinking in September? Okay. I think the governor came in September, if I'm not mistaken.
In
August.
October. Yes.
Okay, I'm just mixing it, but
yes,
you understand what I mean.
Yes.
In terms of 8% rate hike since the MPC started meeting. That's actually what I wanted to say. So why are prices still sticky? Because the argument then, even at the beginning, the first two MPCs were that we need to go very aggressively to chase this. I remember at the last MPC too, Governor Cardoso did mention, okay, because of that aggressiveness, we've seen a tapering of inflation, month-on-month decrease. But this last inflation rate did not taper. In fact, it increased across board. So explain.
Okay, thank you for your question. So I'll first say that the reason why inflation is still sticky can largely be attributed to unexpected injections. Because as you said yourself, there was month-on-month inflation decelerated, if not for June, that it inched up. So the reason why it is sticky is because we have unanticipated injections that we didn't factor in. For example, the wage increase for minimum wage to 70,000, also federal government injections, and I'm sure you've heard about the supplementary budget of 6 trillion, and there are so many fiscal surprises that keep coming into the system. So, and in addition to an inheritance of backlog of ways and means, which we're trying to manage. So those are the reasons.
So is that what is still keeping prices sticky, in the sense that there's so much money supply?
Yes.
But the central bank has also been trying to mop up
yes.
money, yet prices are still sticky. Are there additional factors? Because yesterday, while I was at the MPC meeting, on X, of course, the breaking news, I was tweeting everything that was happening, and the questions people were asking was that high interest rates, why did the CBN decide, MPC now decide on higher interest rates because of the, adverse effects that we would see? I understand that the CBN, part of your role is also monetary tightening, especially in a high inflationary environment. But many Nigerians are not understanding that, coupled with that, even with the high interest rate and the monetary tightening, yet prices are still high. Cost of food is up. Everything has gone up. Cost of medicines up. Everything has gone up.
Yes.
More than you can. Bread now is going for like 2.5. I remember when I used to buy bread less than 1,000 naira. There are some commodities and products that have escalated over 300%, some even 1,000% increase in this same economy.
Yes, yes. We are the committee. We're very mindful of the current situation. Before this decision were taken, there was discussions and brainstorming. The economy was analyzed extensively. And you must understand that monetary policy alone cannot handle these issues. The central bank or the committee will use the tools available to them. That's what they did, to the best of their ability. But there are other structural issues that affect inflation.
Are you saying that perhaps the fiscal side is the more of the fiscal stuff which you guys don't have a control over?
Yes, precisely. Although now we're edging towards strengthening collaboration, and you know the permanent secretary is also a member of the MPC, and she even mentioned some things that they are also doing in order to moderate the current problems that we see with food inflation going up and prices going up generally. So let me just say that the CBN is committed to its primary mandate of price stability, which covers all the prices, exchange rate and food prices and so on. So, and we will use all the tools available to us. And we have been mopping up aggressively.
Are your tools still working?
Yes, they are, because
if they are working, we'll be seeing the outcome.
no. It's now, the prices are now plateauing.
Plateauing at 34%.
You just give us a slack. By next month to the following month, you will see the moderation will now be seen. But we have to be mindful of the fact that food is the most, it has the highest percentage in the basket. And inflation, price, monetary policy cannot handle food alone. No matter what we do, we will only assuage it to an extent. Farmers are not going to the farms because of insecurity. There are issues of seedlings. We have climatic conditions. The central bank can only do so far. So assuming that these fiscal injections, they have not taken effect yet, but once they come on, it's even going to be more. Sometimes it is even anticipation that this would happen. People take positions. So
it's, I'm still trying to wrap my head because I'm wondering how this your explanation will be sounding to many Nigerians that are watching. And I know I asked the governor that question yesterday because for me, the generality of what everybody feels it, what we're feeling right now as a Nigerian is really inflation. And that was why I asked the governor that question yesterday in terms of the optics we are seeing, if it's really addressing the issue of inflation. That means we should have
moderation.
Yes, moderation in inflation, because even your target and the federal government's target, I think, is about 21%, at least according to the budget for this year. But we're already 7 months into the year. I don't know how it's going to be magic.
No, it's not going to be magic. We're confident. Yes, we're confident. Staff forecast shows that we will get to maybe 27% by end of the year. And also the IMF forecast is very much in line with our forecast, as well as Fitch Rating Agency. And we did a survey of simulations by other private investors and also international institutional agencies, and it's very close to what we're doing. Nancy, I must tell you that we would like the general public to understand that the central bank and members of the committee are committed to ensuring that inflation decelerates, but we shouldn't happen magic overnight. As I said, it's plateauing now, and we know it's going to moderate. Even our forecast showed that it should have moderated this month, if not for the surprises, So NMPC is not producing as much, and don't forget that there is a correlation between inflation, food inflation, and exchange rate. So the central bank currently is trying to stabilize the foreign exchange market in order to reduce imported inflation. And at the same time, we're also trying to manage core inflation, so headline and core inflation. So it's a dilemma that we have found ourselves in, but the commitment by the MPC members and the management of the central bank to price stability is unshaken.
Is there a fear that it might get out of control? And why I'm asking that question is because of what we saw in June, in terms of 8% rate hike so far, from I think 18.75%, where the central bank governor met it at that time, to now. So is there a risk that it will get higher than 34. I know you showed us optimism, you've given me optimism that by end of this year, God keeping us alive, you also be here, I will be here. And by December, I'll be saying if it has gotten to 27%, if it hasn't gotten, God help you, ma'am, because I'll call for you. And
God is already helping us.
But what I mean is that is there a fear that it might actually escalate as a result of even more shocks? Because now the 6.2 trillion naira that NAS has actually also passed it for President Tinubu. Minimum wage adjustments will enter. Yesterday, minimum wage bill was passed. Well, I don't know how the states will come around with theirs. Labour will meet with states. That would also have an impact in inflation. So is there a risk that we may see inflation higher than 34% in the coming months because of the shocks?
Okay, so I don't have a crystal ball, but what I'm going to reiterate is that the MPC members and the management of the central bank are committed to price stability. They are committed on reining in inflation, and I'll even tell you the steps that they have even taken further. We are now collaborating with, we've strengthened our collaboration with the fiscal authorities, as I said earlier. And in addition to that, we want to see how we can strengthen development finance institutions, such as the BOI, especially those that we have equity shares. Yes. So we're trying to strengthen them, the Bank of Agriculture, Nexim, to refocus them to actually target their mandate. So if they do that, we're also going to institute forms for monitoring and evaluating their performance, and we're going to ensure that they do not give loans to people that shouldn't be getting the loans, that the loans should go to actually those that need them. And we've commenced discussions with the Bank of Industry for them to now start channeling more of their loans to SMEs. Because as you know, small and medium scale enterprises build an economy. If you give them the financing they need, it will strengthen your economy. So what we're doing now, we're holding discussions with these institutions. We're building their capacity and also ensuring through our oversight functions that they adhere to targets that they should be adhering to in the first instance. And in addition, if I may add, since we have now, well, we've always known the correlation between exchange rate and inflation. I'm sure you too, you know the efforts that the management of the bank has been undergoing to ensure that we get capital inflows to stabilize the foreign exchange market. And you can see in the last few months, we've had over 8 billion inflows into the country. And that is largely due to all the policies, the restructuring that we have done, the reforms in that space, trying to attract diaspora funds by licensing more IMTOs, and also trying to strengthen the Bureau de Change as well as other segments of the market to ensure that we harmonize our markets, which we have achieved, and in order to also reduce the volatility in the market, and which I think we have achieved.
Okay, just as we move to the end of this segment, explain to Nigerians that are watching now and that do not understand why the Central Bank of Nigeria raised interest rates yesterday. To 26.75%,
yes.
50 basis points. I think that's the lowest since this MPC came in.
Yes.
The lowest rates.
It could have even been higher.
It could have been higher. Okay. When some people were saying yesterday, why not just hold it first and see how things go? So I want you to explain why you decided on higher interest rates again, because people don't understand that the economy is struggling. Nigerians are reeling from hurting inflation. Businesses cannot borrow because this will translate to higher borrowing costs. They will be getting letters from their banks now that interest rates have increased because of the anchor rates have increased. Those that want to get loans may not actually get again because even the banks are trying to. Then on one hand, there's the windfall tax on FX gains So there's so much. So I don't know how you would do it, but God help you explain, because
Okay,
explain
just
why
a
you
quick
need
one.
to increase
Yes,
it.
before I explain, the windfall tax has nothing to do with the Central Bank of
Yes, I
Nigeria.
know. I'm just
That
saying.
was
I'm
the
just
federal
putting.
government.
Yes, I'm just
Yes.
putting.
Okay.
Setting a contest.
But it is good actually for the country, the windfall tax, although the policy didn't emanate from the Central
I know it
Bank.
didn't emanate from
Okay.
you.
So having said that, the rate hike will attract foreign capital inflows. That's one. So the more inflows we have, the more dollar there will be.
But
so
you
let me
still have
come
a
down to
negative
granular.
You still have negative real interest rates.
Yes, it will stimulate savings, and savings is good. So, and also we will reduce liquidity in the system, because you know in economics the theory that inflation will keep skyrocketing if you have too much money in the system chasing too few goods. Now we are underproducing, especially food, and that's largely due to the insecurity. There's banditry. Farmers cannot go to the farm because of kidnapping. There's insurgency in some areas. We have middlemen who go and buy off agricultural products from farmers and export to other countries, because the volatility in the exchange rate and the depreciation of the naira has made the naira cheaper. So they can export food to our neighboring safer countries, the francophone countries, and sell our food at produce at a cheaper rate. So when they do that, it's cheaper for them. It's more. They gain more. They gain more profit if they sell. So while consumption is now limited in the country. So these are the things. So once we get this our exchange rate right and inflation moderates, there will be equilibrium. So I want the average Nigerian citizen to understand that the central bank's policy is actually targeted at addressing inflation. When we address inflation, once inflation is addressed, food prices will decelerate. Prices also, I can see that there will be difficulty in them understanding the relationship between exchange rate and food prices.
Exactly. In
But
fact, a comment came in from one of our viewers, and it's saying, how does this put food on the table? In fact, he said, good morning, I've listened to you and the CBN governor yesterday. How does all these policies put food on the table of the man on the streets? That's a question coming in now.
Yes, so you see, for example, we do not produce enough as much as we consume. So we import food, and there's imported inflation. So, and now the federal government, the fiscal authorities now they have a plan to fix the supply gap by bringing in more food into the country. They're going to import maize and corn, and this is all the effort of the collaboration between the monetary and fiscal authorities. So there will be food on the table in the next 3 months. There's, I think it's 150 days. There's going to be that supply side from the fiscal authorities. And we hope that we know, because we've seen what hiking interest rates from March, for the 3 past MPCs, we've seen what it has done to the economy in terms of reducing the quantum of liquidity in the system. If we had not taken these decisions, the counterfactual, there would have been a different story by now. Inflation would have been much, much higher than what it is today, trust me.
Okay. You're sounding like the central bank governor. I think I remember one of those meetings too, which he mentioned is, but if we didn't go this aggressive, yes, it would have been much more higher. Yes. But I think we'll leave it at that for now. So I will allow you, I'll give you a slack. I'll allow you go. And perhaps let's see what happens in September, because the next meeting also is in September, towards September ending. We have 2 more meetings of this year.
We have the meeting in September and the meeting in November. So at least the citizens can now see that we are even going into seeing how we can strengthen DFIs, as I said earlier. We are reforming the exchange rate sector, and we are even supplying. Last week, we supplied about $122 million into the market, just to moderate the market. We have limited, the tools that we have, that's what we can use. We cannot use tools that we don't have. We can only collaborate. Now that we are having talks on not only collaborating with Ministry of Finance, the fiscal sector includes Ministry of Trade, National Planning, so And then we're also going to communicate further on what we do. Like what I'm doing now, we're going to go granular, down to the grassroots, so that they will understand the relationship between what we're doing and
how it affects
and how it
Nigerians.
affects them.
Because that has
And they will
actually
also
been lacking.
understand that it is not totally dependent on us. We are not the military. We cannot address insecurity. There's so much that monetary policy can do. But to the best of our ability, the tools we have, we are deploying them effectively. And I believe that they are efficiently yielding results.
Okay. I think we'll leave it at that. Thank you very much, Dr. Ladi Bala-Kefi, for joining me today. I'll see you soon, so have a good day.
Thank you very much for having us.
All right, I've been speaking with Dr. Ladi Bala-Kefi, Acting Director, Monetary Policy Department of the Central Bank of Nigeria. That department is very integral in putting together what happens at the MPC in terms of, you know, all the communique and all of that. I know that months of work go into what they do for those 2 days, and that is why she's actually here to explain some of those behind-the-scenes stuff that we don't see. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to the YouTube channel, drop your comments as well as like, and most of all, share our content.